And I know who's behind Bitcoin. And it ain't some f***ing Japanese guy in a cave. I know the guy. And when that comes out, you heard it here first. Bitcoin is going to zero. Zero.
So Dan Peña made that video a while back, and now with these new court filings in the Epstein case hinting at something wild, these emails that were leaked showed that he allegedly met with Satoshi at a climate summit in 2014 and even funded Bitcoin in the early days. Now, you guys have seen this information, but the way that Bitcoin is organized currently is that there are 5 core developers and around 100 contributors to the core code. So like Dan Peña said, Satoshi is not some Japanese dude in a cave. It's a group of people. And this news alone caused massive panic in the market.
However, I will tell you, big picture, we have over $17 trillion being invested in our country in 9 months. It's now just about ready to crack 18. And by the end of 1 year, we will have about $20 to $21 trillion invested in our country. That's more by 10 times the highest amount ever invested in any country ever before. And it's largely because of tariffs and I think November 5th election. But it's the largest amount as an example. So if we have 20 or 21 in 1 year, 21 trillion, think of what that is. That's car factories, that's AI, it's everything. They're all coming back because of the tariffs. They're all coming back.
So at this point, the proof is in the partnerships here. I thought this picture was funny, with Bitcoin partners being, people like Jeffrey Epstein, and Ripple and XRP's partners being some of the most credible companies and central banks around the world. Long term, everyone knows where the real utility lies. But what determines whether we all get a job at McDonald's or if the crypto market is going to pump by the end of this year is going to be based on where that liquidity flows over the next 30 days. Because over the last decade, Bitcoin has printed one of its most misunderstood signals again and again and again, which is called the death cross. And that's when the 50-day SMA drops below the 200-day SMA. And most traders panic when this happens, but the data tells a different story because we've seen the past few death crosses this bull run, Bitcoin sell off going into the death cross. And the last 4 major death crosses this cycle during an upward 200 SMA actually marked the bottom, which was followed by an upside rally. So here's some macro historical facts here because we're going to focus purely on the data. And then, as always, this is not financial advice. These videos are purely for educational, informational purposes only, and purely speculation here. So 9 out of the last 12 death crosses were followed by a strong rally, and only 25% led to deeper drops, mainly during clear bearish trends like 2014. Now, we can't ignore that we are at the end of the 4-year market cycle theory, but we also can't ignore the fact that out of the 30 bull market peak indicators from CoinGlass, 0 of them are saying that we're at the top. So this has been one of the strangest cycles that we've ever seen because in previous cycles, it's been euphoric, whereas this cycle, we did not see that euphoric blow off top. We just saw several months above $100,000. So there was plenty of time to sell, but everyone was waiting for that euphoric phase for us to explode back to the upside. But nonetheless, the last 4 times that we saw a death cross this bull run cycle, price dipped into oversold territory, panic hit the market, Bitcoin bottomed near the cross, and then a multi-month rally followed. And each rally ran 20% to 40% shortly after, and even bigger moves in the months that followed. So today's setup is nearly identical, and here's why this 2025 signal looks even more bullish over the next few months. Because this year's death cross is forming in deeply oversold conditions without any strong pre-bounce. So that's super important to note because in 2019, the death cross happened after a big bounce, which was bearish. And in 2025, it happened before a bounce, which is bullish, just like the previous bottom forming crosses. So that puts the probability of a rally at 75% based on historical data. So here's what it means for the price. If Bitcoin repeats the same structure as the last 4 signals this quarter, then roughly the $80,000 range could be the bottom zone, and a relief rally to about $100,000 to $110,000 over the next 1 to 3 months becomes not only just very realistic, but actually a high probability here. So that's the same pattern every single time. We see the death cross, we see the bottom come in, then we see a breakout rally followed by a multi-month trend. Plus, if we bring up the fear and greed indicator right here on the weekly chart, you can see where we currently are is very similar to where we were, and I'll just mark it up for you guys on the chart for each time in the past. And so the previous time was when Bitcoin was around $79,000 bouncing off of the 50 EMA. We saw a little bounce up followed by one more sell-off, back down to the 50 EMA, then a reversal back to the upside. The time before then, Bitcoin had sold off from $72,000 down to $60,000. And even though that wasn't the bottom, we did see an aggressive recovery rally back up to $70,000 and then a sell-off further to the downside. The time before then, where we're at these levels, I mean, we could count this point all the way back here, but it wasn't even as fearful as we are right now. But Bitcoin was actually at $47,000. We saw a little rally to the upside and then a further sell-off to the downside. The time before then was very similar to what we saw right here on the 10th of March. Bitcoin was at the 50 EMA. We saw a little rally up and then another sell-off back down to the 50 EMA, then a reversal back to the upside. So there's just a high likelihood that Bitcoin sees a rally here in the short term, but there also is another higher likelihood that we see a further sell-off to the downside. So I think the chart is going to look something like this. Now I could be 100% wrong here, but I do expect a recovery rally back up to $98,000 to $100,000, which would intersect the 50 EMA, similar to what happened back here. And the longer that it takes for Bitcoin to make this recovery rally, the likelihood of us being in a full-blown bear market for us to then bleed out further beyond that and not make a new all-time high increases. Now, it doesn't weigh out the probability that, we could go to a new all-time high by the end of this year, but we would need to see an aggressive V-shaped recovery. We would need to see something absolutely insane happen with some institutional liquidity injections happen in the market. And a lot of people would ask, well, what would cause this? And that's anyone's guess. That's like secret society, insider meetings getting together and pumping liquidity in the market with nobody knowing, guys. These are like the trillion-dollar families, the multi-billion-dollar companies coming together and having their private conversations, everyone on NDAs and just pumping money in. So because you're not privy to that information, you have to learn how to read the charts and weigh probabilities here and just understand how to properly position yourself so you don't get completely wrecked. And so there's a few different ways to do that, and I'm going to discuss them in this video so you can fully understand where we are right now and the likelihood of what's going to happen next. Because currently on Bitcoin's daily chart, you can see the stochastic RSI is at 12 and 4. We're in oversold conditions. Now, just because we're in oversold conditions doesn't necessarily mean that the bottom is in yet, because back in the 28th of February 2025, we were in oversold conditions. We saw a bullish cross. Bitcoin bounced from $78,000, came all the way up to the 50 EMA, which was 94,000, and then sold back off to the downside, and then continued to sell off all the way down here to about $74,000 before eventually making that breakout on out of here. So it's going to be a tough uphill battle here with the 50 EMA acting as resistance, but the likelihood of a recovery to the upside very, very high based on what we're seeing on the stochastic RSI right now. Now, does that mean that uptrend in the short term will be sustained? Not necessarily. I would expect the 50 EMA to act as resistance over the next few months in December. And so it's going to be very volatile going into December, but that would mean a recovery here on the relative strength index as well too. And you can see back here the last time that we dipped below 30 on the relative strength index was in February, the tail end, during that aggressive sell-off right here. And I'll just clear the chart so you guys can see this aggressive sell-off. And then we saw this recovery back to the 50 EMA, and it was aggressive, and then it got rejected back to the downside. And so I would expect there to be a recovery back to the 50 EMA, the relative strength index, to make a recovery back out of oversold conditions like we're doing right now, the stochastic RSI to experience a bullish cross and pass above 20. And then we will revisit these charts in a little bit to see how price action responds to the 50 EMA back to the downside.